This first video is just going to be a 2-minute or 3-minute introduction into the 2016-2017 federal budget. What's happening? What are some of the automatic stabilisers impacting the budget? What are some of the deliberate measures within the budget? And whether the budget will be considered expansionary or contractionary. So first of all, the estimated budget deficit has fallen from $39.9 billion for last year. Originally, they thought it'd be $35.5 billion. So when they actually did the budget in May 2015, they thought it'd be $35.5 billion. But now it's expected that the 2015-2016 budget deficit will be $39.9 billion. And in 2016-2017, that deficit will fall to $37.1 billion. So because the deficit is slightly smaller than last year, the difference between injections and leakages essentially is now slightly smaller. So we would consider the budget to be less expansionary or perhaps slightly more contractionary than the last budget. The Liberals would suggest that this budget is designed in line with fiscal consolidation. However, they've kind of extended the period of time that they're willing to wait before the budget gets back to surplus. So it's kind of like a relaxed approach to fiscal consolidation, recognising that we want to get back to surplus, but it's going to take a while, and they're not willing to increase taxes to try and achieve that in the short term. So the lower deficit implies that it's a contractionary budget. So if you get given the figures, you need to say that. You need to say that, the deficit, quote the deficit, falling from $39 to $37 billion. Therefore, the smaller deficit implies that it is a contractionary budget because the difference between injections and leakages is smaller. However, the deficit is really only been reduced because of automatic stabilisers. So it's only because the economy is growing slightly faster than last year that our budget has gone into a slightly smaller deficit. The discretionary policies within the budget have actually been quite expansionary and have added another $5.5 billion to the deficit. So if it wasn't for these expansionary discretionary policies like cutting company tax rates and putting money into the jobs path for youth unemployed, then the budget deficit would have fallen to $31.7 billion. So when you're concluding or talking about the stance of the budget, we can say that the budget represents a relatively more expansionary stance if we just focus on the actually deliberate discretionary measures. So that's the way I want you to describe the budget. It's a contractionary budget in the sense that the deficit has fallen, but the actual deliberate policies within this year's budget have been quite expansionary. The main reasons for the continuing deficit include weaker commodity prices. So, for example, the lower commodity prices have led to reduced company tax because companies aren't making as much money, reduced income tax because people in the mining industry and associated industries are making less money. So the miners, that multiplier effect, that miners are spending less, so other companies are making less money. That's also led to increased unemployment, the lower commodity prices, because the mining industry have cut wages and cut workers' hours. So all of those things have led to a bigger deficit. Slow real wage growth has been another thing that has, basically when you're referring to that, I would say that it's slowed the rate with which taxes are being increased. So, it is wage growth, so they are collecting slightly more tax, but the rate that they would expect to increase their tax revenue by is not increasing as much as they'd like, and perhaps not at the rate of expenditure. So slow real wage growth leads to only slightly small increases in income tax. It can lead to only perhaps have negative implications for consumption because wages aren't going up as fast as they expected. So that can lead to less income tax predominantly and less GST. Other things that are causing the deficit to remain, less investment spending. So when firms aren't investing, they're not hiring as many workers, so there's not as much income tax. The global economy has slowed down, so exporting industries aren't making as much money, less company tax, less income tax, less spending because people aren't making as much money, more people are unemployed because there's less demand for our exports. You've got to get good at being able to link a certain event and link it to income, company tax, GST, welfare consistently. And finally, other things that are keeping us in deficit, unemployment's above 5% still. So unemployment has fallen compared to last year, and that's one of the reasons the deficit has fallen, but it is still well above our goal of 4 to 5%. Share prices have been fairly weak, so the government's not collecting much capital gains from shares. However, they are collecting quite a bit from house prices still appreciating. So the fact that house prices go up, if it's an investment property, the government will collect more capital gains tax, and that's good for increasing their amount of revenue. One thing that the Liberal government have quoted is that in this budget, all new government spending is being offset by reductions in spending elsewhere. So they're not trying to increase taxes, but any new spending initiatives have been funded by reducing spending elsewhere. So whether that be via cutting public service jobs, and then they have increased taxes on things like cigarettes and multinationals and things like that, and also made it harder for people to defraud to get welfare and disability insurance. We're ensuring spending is fit for purpose by continuing to cut waste and unnecessary spending. That's basically your lead into this year's budget.